Good morning, I'm AJ Dasani from Ace Accountants and Merkler Sharp Accountants, your happy, smiley accountants, with our usual budget update. This time, October 2024, new government, new Chancellor, First Lady Chancellor, which is fantastic. I really like that personally. So there's a lot in this budget, as we've obviously known for a while, so I will get straight into it. As you may have seen in the taster video, Simra, my daughter, mentioned in her debut video, we'll be discussing in the main employers' national insurance, capital gains tax, stamp duty, business rates, been on electric cars and pensions, as well as some other smaller changes. So to jump straight into it, firstly, and biggest change, employer's national insurance. That's the one that the employer pays, not the employee. The current rate is 13.8%. That's going to go up to 15%. And the threshold at which it starts to be paid was 9,100. It's now going down to 5,000. So for the larger businesses, they'll be paying more of it for more of the salary. But for smaller businesses, a really good benefit is you get what's called the employer's allowance. And that's basically another tax-free bonus of employers' national insurance. And that was £5,000. It will now be £10,500. That's a really, really good benefit for our clients, smaller businesses. Second, capital gains tax, CGT. There are two different rates at present, one for shares, one for property. The shares rate is the one that's changing. It was 10%, or it is 10%. It will go up to 18% at the lower rate if you're a lower rate payer, and from 20 to 24% for higher rate payers. So that's CGT. Another small CGT change is one for business asset disposal relief, or otherwise what used to be known as entrepreneurs relief, when you sell your business that you've owned for a while, in layman's terms. The limit was £1 million for this lower rate of 10%. That'll stay until April 2025. And from April 2025, the rate will go up to 14%. And from April 2026, will go up to 18%. So that's CGT. From an IHT perspective also, business property relief will have some changes. So generally business property relief, without going into the mechanics, helps with IHT in terms of things like shares and ownership in businesses. From 2026, that will be liable to inheritance tax from £1 million upwards, with a relief of 50%. So that only affects the really largest businesses that are passed on to the next generation. Third, stamp duty land tax, the tax that you pay when you purchase a property. A couple of years ago, the previous government brought in a 3% surcharge on additional property. So you don't pay it on your main property, but you pay it if you have more than one. That percentage was 3%. It's now going to be 5%. Number 4, business rates. So this is sort of good and bad depending on where you sit, but by and large seems to be a good benefit. So for the 2025 year, there was also up till April 2025, there was a 75% relief for retail, hospitality, and leisure, and that is going to go down to 40%. So that will be tapered off for that year. And then from 2026 onwards, there will be permanently lower rates for those in the retail, hospitality, and leisure. So that's a really, really good bonus. And apparently it'll be paid for by those with online businesses and their premises. So we'll hear more about that, I think, in due course. 5, electric vehicles. A lot of you guys know, I think they're an absolute no-brainer from a tax perspective, because they have a double-edged benefit. One, you get to claim everything, so obviously it's great for corporation tax. But the other benefit is, right now, if you didn't have an electric car, part of what you're drawing and paying income tax on is going to pay for your personal combustion engine car. That obviously frees up some more income. So I think there's a really, really good benefit in having an electric company car. And Rachel Reeves announced yesterday that the current lower rate system for benefit in kind tax, and the big difference that exists, the reason it's a no-brainer, will continue. And also the gap in what we used to call road tax, now VED, between combustion engine cars and electric vehicles will from 2025 increase. So increasing the incentive to have an electric car. I really like that personally. Number 6 is pensions. So pensions now will sit within, or from 2027 will sit within the IHT estate, so they won't be inheritance tax free. And a couple of smaller ones just to touch on. The national living wage will go up to £12.21, and eventually there'll be a single rate for adults. Fuel duty is frozen, and the 5p reduction on the fuel duty will stay. The non-dom tax rules are abolished. Big on the news, but practically doesn't really impact a huge amount of people. Domicile is a very, very niche issue, so don't worry about it. It's nothing to do with residents. VAT on school fees we knew was going to start from January 2025. That's confirmed. And a nice little one for the future. I really like this. I wanted to end on this. Income tax thresholds for years remained frozen. £12,500 in terms of your basic rate, your tax-free threshold, and then £50,000 where you start to pay higher rate tax. That'll go up in line with inflation from 2028. So, to recap, we spoke about employers' national insurance going up, thresholds going down, employers' allowance going up. We spoke about CGT rates, mainly on shares, a bit about business asset disposal relief. We spoke about SDLT on additional properties, a bit about business rates changes, a bit about electric cars, because I like those, and a little bit about pensions and the other small changes. But any of those jump out at you, most of those really will just be automated, or you'll have to speak to the relevant authorities like business rates, for example. But if you have any questions, feel free to reach out. And we at Ace and Merkler Sharp Accountants are always quite happy to help. Have a lovely day. Thank you for watching. Goodbye.